Good morning, all. I hope you are well. So, I have three pairs on watch today. Those are pound dollar, Kiwi dollar, and dollar CAD. As I say, because it's New Year's Eve, I'm not anticipating any of these to shape up today. But again, this is more for the purpose of keeping in the practice of good habits. And as I said the other day, a lot of these things can look like they're not ready, and then very, very quickly the market shapes up. So it's more about just staying on the ball and keeping up with the practice of good habits. But let's break these pairs down. So I'm looking to get short on pound dollar, short on Kiwi dollar, and long on dollar CAD. Why? Because if we switch to the DXY ever so quickly, I'm going to just break this down once again very quickly. Previously, we had this impulse down, and then we had this correction, and we had the gap, the near miss to this high here, and then we were looking for price to potentially come down from here and take out this low, which this low near miss to. Okay, let's just get this off the chart a second. Whoops, there we go. Let's get that off. Okay, so on this occasion, we wicked to the area and not through it. So there was always a reason for us to come back up, maybe tap just above, okay, and then start to move down from there. But what we've done instead, okay, is we've consolidated at what is supposedly an area of value, okay. Now, at this moment in time, that's looking like a ball flag to push higher. And that does kind of make sense as well, because this correction is very, very wide relative to the move down which is preceding it, which is what we call, when this happens, an M style pattern. Okay. Too much volume gets generated down here, becomes more neutral, and we then come up and end up testing these highs in this area. Okay, and that is certainly what we're seeing on the DXY, because of the fact that when we drill down, we have this kind of 4 hour structure, that we can see on the 4 hour chart starting to form for potential consolidation to the upside. Where does this get invalidated? It gets invalidated if we break below and start forming continuation underneath. Then we know that this idea hasn't played out. So at this moment in time, I'm seeing dollar strength, and this just being accumulation for that next move higher, because price did not find enough liquidity at these highs, these higher time frame highs. So with that in mind, we can anticipate short moves on pound dollar. Why would we anticipate a short move on pound dollar? Because we have this high here. This is significant because we had all of this correction here. We then leave a footprint, and then price sells off from there. Okay, and the clue that that was an area of value is the fact that we near missed to it. Okay, we then come up again, we near miss to it again, we break above, catch people the wrong side of the market, and then move to the downside. And now we're in a state of continuation, where we're just looking for continuation, basically just to take out this low, or these lows. If you look here, there's lots of this low near miss to this low to some extent near miss to here. So there's lots of reasons why price would come a lot lower, perhaps not all the way down to here, but we do have a lot of volume there. So who knows? But there's no logical reason at this moment in time why price would go long, especially given what the DXY is doing. And it looks like we're just consolidating at this low. Okay, if we were going to react from there and start pushing up at this moment in time, this is not typically how you respond from what's an area of value. So I'm just seeing this as an impulse correction continuation to push lower. And if we measure this impulse here, and we assume that the continuation leg out is of a similar length, that would actually take us down to that area. And if we measure it on the break, because sometimes the volume that's been generated within the correction can dictate how far we go, that would take us down to there as well. That makes contextual sense. So then when I drill down, what I can see is that we have, if we just analyze this, so we had this little consolidation here, which was the footprint after we broke out of this long channel here. We then tap into the footprint, and then we move down. Okay, not immediately. We come back up, retest the back end of that, move to the downside, retest the back end of this consolidation, move to the downside, leave a little footprint, which just so happens to be the retest of the back end of that. So what I'm going to be looking for, we're already starting to see those gaps, which makes sense. What happens? We near miss to that high. What happens when we near miss? We usually come back up to fill it. What's happened? We've come down, and then we've had an impulse correction. Why have we had an impulse followed by a correction? Likely because we have a gap. This high broke above this one and this one, but left a gap to this one. So this is likely an impulse correction continuation to push higher to take out all of these gaps and finally tap into this high, which these highs keep near missing too. Might this consolidate sideways? It might do, because we're approaching New Year and a bank holiday, and that would make more sense, because then we would have more of this and more of a scoop between the touches, which is more likely what we see most of the time. Okay, so what I'm going to be looking for, just in case this happens a little bit sooner than anticipated, and I won't be holding any positions because of the bank holiday coming up, is I'll be looking for either a 4-hour risk entry, so a 4-hour rejection, okay, a high test or a retrace candle, or if we get there very quickly, okay, I'll be looking for the push down and the 5 or the 15-minute insurance entry, the flag, and then I'll be able to manage it down to these lows. Okay, now as I said yesterday, I will be targeting this low, the higher time frame low, but depending on the size of the stop loss, if the stop losses are more in keeping with this, okay, and I've got more, something in the region of more, say 9%, excuse me, then I would actually just set the take profit there. So it's kind of dependent on the size of the stop loss. If we need a wider stop loss, for example, and the risk to reward is less, then I'm more likely to hold this for the longer term move, the higher time, towards the higher time frame low, if that makes sense. But anyway, these are the entries. That's what I'm going to be looking for. Let's move on. So Kiwi dollar, it's a similar sort of thing. This is what I would call bank holiday price action, where I don't mean that this isn't clear. It is clear, but when we've got these gaps and we're quite a long way away from the area of value, this gives me the indication that it's going to take until the other side of a bank holiday potentially to get up to these areas, and give me what I'm be looking for. But then we don't know. Okay, the market can do anything at any time. Okay, what we do know is that we have this low here, which this low near missed too, so it's likely we'll gravitate back towards there, especially as we've broken through all of these lows now. Okay, and the last line in the sand for a potential long move, which was here, okay, we didn't get that. We just steamrolled through, and now we're consolidating underneath in keeping with what the DXY is doing. Okay, so if the DXY is consolidating sideways to push higher, then this is likely consolidating sideways to push lower. Dollar strength, okay, Kiwi dollar weakness against the US dollar strength. So it looks likely to me that we'll move lower to move towards these lows. Okay, so we just drill down a little bit. There's your 4-hour consolidation. There's the gaps, what I was talking about. This breaks above that, but leaves a gap to that one. We move down quite correctively. Okay, so this is likely this for the move back up to tap into that area. So there's really not much to analyze on this pair at all. So with that in mind, and in the interest of keeping these videos as short as possible, what I'll be looking for is a tap into the area of value, followed by a 1-hour impulse down and a 15-minute continuation. I don't tend to take 5-minute continuations or risk entries when we are a long way into a move such as this one, because you have to remember that people take profit, and sometimes these can start pulling back more deeply. Perhaps we end up with something like that, that perhaps retests the back end of that before we start pushing lower. That's not typically what we would see if we're going to reverse from lows such as this. We would tend to see the tighter consolidations, but if we're going to steamroll through those lows, we would see something more like that. And, if we were going to see it, that would be the area we were going to see it. So I'm just waiting for slightly more deliberacy, the push down and the 15-minute continuation. And then I would look to target that low as a first target, and then those higher time frame lows as my longer term target. Okay. But there's plenty of room to get your risk off the table, even just within this structure. And then we've got dollar CAD, which is basically just the flip, the inverse of what I'm looking for on Kiwi dollar. So let's just zoom out a little bit. So similar sort of deal. We have the high there, and we have the gap to the high. Not as much of a gap in this instance, but we do have a gap, and we've steamrolled through. This is literally just Kiwi dollar upside down, basically. We have this. We've steamrolled through that, and then we appear to be just consolidating sideways, just as the DXY is doing, for that move to push up to tap into those highs and likely break above, even if we were going to move to the downside from there. Okay, so this is quite straightforward. We just zoom in, you can see the consolidation there. What have we done? You can see even on the daily chart, we've left a gap to that low. Okay, and what have we had? We've had, or appear to have at the minute, bearing in mind that this candle closes at 10 o'clock and it's currently 9 a.m. UK time, we've left a gap once again to here. What do we have? The same mechanical psychological patterns. We have this low which breaks below this low which breaks below here but leaves a gap to there. So it wouldn't surprise me if we get something like this. Okay, over the bank holiday, then we get that, tap into that, and then we go. Then we get that. Okay, but just in case, we move to the downside a little more quickly. Okay, move back down a little bit more quickly, and that candle which has just closed, that is a typical example of what I would anticipate if we are going to come back down to tap into this low, which these lows have near missed too, because you've got to remember, to many, this looks like the retest of the back end of that, which would give it reason to come back down and tap into that before that move. Okay, so that makes contextual sense. So what I'm going to be looking for in this pair, or from this pair rather, is going to be the same thing, because we're potentially quite far into the move as we are on Kiwi dollar. I'm going to be looking for the same as I'm looking for on Kiwi dollar, just in reverse. Okay, so tap into this area. One of the reasons I prefer Kiwi dollar and why I've got it higher up on my list is because with this one, we have a little consolidation sat just below. Okay, so there's always the possibility you may tap into that first, which makes a trade like this slightly not higher in risk, but just increases the risk ever so slightly. On Kiwi dollar, there's no consolidation sat just outside of the larger consolidation, okay, which makes that a little bit more reliable. But what I'm going to be looking for is a tap into this, and then that 15-minute flag again, and then we've got, in this instance, what I do like about this one is the larger structure actually has more room to play with than it does on Kiwi dollar. So we can kind of get 6% to that high. And if we measure this, what I've said previously is that the 90% area of a structure is where price can often pull back deeply, even if it's going to continue going. So I would actually set my take profit there, because that's where we could pull back to the 50% area, even if we are going to keep going. So that's what I'm going to be looking for from these pairs. And that's it, folks. I hope you've enjoyed this video. I shall bid you a very happy new year. It is currently New Year's Eve, and I will see you again in the new year and in the next video. Thank you very much indeed for watching.